very warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbaragu. It's Thursday, the 19th of February. We thank you for joining us at this time on the show.
All right, let's tee off with your news now in Rwanda, where the National Bank has raised its key lending rate by 50 basis points to 7.25, following a rise in inflation above the target band. In a post-MPC media statement, Governor Soraya Hakuziyaremye said the move is a measured step to bring inflation back within the 2% to 8% target range, supporting sustained economic growth. Let's listen.
And so, in view of more persistent inflationary pressures and an upward revision of the inflation outlook, the Monetary Policy Committee decided to increase the central bank rate from 6.75% to 7.25%, and that's an increase of 50 basis points. The decision to raise the central bank rate is a measured step that we are taking to bring inflation back within the target band between 2% and 8%, to safeguard price stability, which is a necessary condition to sustain our economic growth, as well as protect the purchasing power of Rwandans over the medium term. The MPC will continue to monitor inflation and economic developments and stands ready to adjust the policy if inflationary pressures intensify beyond our projections. But equally, if inflation declines more rapidly than anticipated, the MPC will assess the possibility to ease the monetary policy stance. As Central Bank, we are committed to data-driven and forward-looking policy decisions to ensure that inflation converges towards the target range of 2 to 8% in the medium term. We will now move on to the outcome of the Financial Stability Committee. The Financial Stability Committee held also its meetings this week and assessed the overall stability and performance of Rwanda's financial sector, and it concluded that the financial sector in Rwanda remains sound, resilient, and well-positioned to support the economy in spite of global economic uncertainties.
In Nigeria, President Bola Ahmed Tinubu has signed an executive order effective February 13, 2026 to safeguard Nigeria's oil and gas revenues and ensure all government entitlements are paid directly into the Federation account. The order ends excessive deductions, including the 30% management fee and 30% frontier exploration deduction, which the president says have weakened remittances and hampered development. The president adds that NNPC Limited will operate strictly as a commercial entity. An implementation committee will oversee the order, and the Petroleum Industry Act will be reviewed to address revenue leakages, reaffirming his Nigeria First agenda. In Ghana, President John Mahama today unveils Ghana's vision for the mining sector, focusing on boosting local content, driving value addition, and accelerating economic growth. The strategy aims to transform the industry, create jobs, and position Ghana as a leader in sustainable and inclusive mineral development. Here are excerpts.
While Ghana is Africa's leading gold producer and amongst the top 6 globally, much of the high-value activity in our mining value chain, advanced engineering, processing, equipment manufacturing, technical services, and refining still takes place outside our borders. In 2023 alone, the extractive sector generated almost $6.6 billion in export revenues. However, local participation in high-value segments remains very limited, with domestic procurements accounting for only a fraction of the total sectoral spend. We've been prolific producers, but we have not yet become full participants in the extractive value chain. This summit is about closing that gap. As we deliberate, we must ask ourselves a fundamental question. What will be the true legacy of Ghana's vast mineral wealth 100 years from now? Will it be recorded only in export statistics and royalty payments? Or it will be remembered as the foundation upon which we build world-class industries, thriving Ghanaian enterprises, and resilient mining communities? This question must serve as our compass to offer us direction. While Ghana is Africa's...
Meanwhile, Ethiopian Airlines, Africa's largest network operating carrier, has announced plans to inaugurate 3 new domestic airports and launch passenger flights to Negele Borena, Garametu, and Debre Marcos by mid-April 2026. The airline will operate thrice-weekly flights to each destination, expanding its domestic network to 26 airports and strengthening air connectivity across Ethiopia. Still in the region, Midrock Investment Group has inaugurated a 1 billion barrel coal processing facility in Western Ethiopia to cut fuel imports and boost economic supply. Prime Minister Abiy Ahmed attended the Arjo coal plant launch in Diga Wareda, Oromia. The plant, processing 200 tons per hour, will supply cement, steel, and construction materials. Producers create 250 jobs and use chemical-free processing under Midrock's National Mining Corporation. In other news, business leaders, policymakers, and investors have converged in Lagos today for the Nigerian-British Chamber of Commerce Sharing Experience Series. Here are some excerpts from the event.
You can know one thing very deeply, you can't know everything very deeply. So the importance of having a good team around you is very, very important. An expert in economics, an expert in finance, an expert in fiscal matter. Just make sure you have the right, an expert in agriculture, whatever you really want to make sure you have the right folks in your room. That is one. And number 2, the leader must also be sufficiently informed to be able to query everything that is being discussed at the meeting. So have the right leadership, have the right experts in your room, have the right consequences for not performing, consequences for bad behavior, and also have the right reward system as well. I mean, I'm not saying that bad reward should encourage bad performance, but I mean, if you have consequences, rewards are also very important. Reward, consequences, the right skills, the right team, and accountability, making sure there's a price for failure. If there's no price for failure, then there's no constant raising of your game. And that's what we all do when you run businesses. I mean, you must have a good team in place. You must make sure that you have the right folks in the bus. You must sit on the right seat, and you must also be able to get them out of the bus if they're not delivering. Those are the things you need to do every now and then. Appraise your team. Those who are delivering, give them additional incentives. Those who are not, get them out of the team. Otherwise, you're going to have a team of average performance if there's no way of getting rid of those who are not delivering to your expectation. So team, accountability, consequences, they are all very important in driving change. You can know one thing very deeply. You can't know everything very deeply.
Finally, on News Now today, Kenya has launched a tender offer to buy back up to $350 million of its 8% 2032 Eurobond and $150 million of its 7.25% 2028 Eurobond funded by new USD notes. The move aims to smooth maturities with preference to participating investors. Totally outlay is $500 million, including interest. The offer expires 25th February, settlement on 3rd of March. Any repurchased bonds will be cancelled, reducing external debt. I am Melissa Enoch, and that is on News Now this Thursday. The show returns shortly with Grace at the FMDQ ticker tape room for our market updates.
following over 600 technologies, technology by technology. What is the maturity level? How much investment costs? Where are they happening? And what are the policies pushing those technologies? And it is one of the basis of our annual work on energy technology perspectives. But technological breakthroughs don't happen just like that. Somebody clever comes and comes up with idea, a genius person. There may be genius persons, but the genius person to work, we need stability, political stability for the investors, for the researchers, for the startups. And countries who provide the stability and the technological innovation made very, very good results. I want to give you one, in my view, for my European friends and colleagues, rather bitter example. First of all, I should say that in the year 2025, when we look at all the power plants installed in 2025, close to 2/3 are solar panels. This is a data, this is a number. And these solar panels, more than 80% of the solar panels are manufactured in one single country, China.
Address you today for the first time as a governor of the Bank of Namibia. I'm deeply mindful that this office exists to serve the Namibian people, to safeguard the value of their money, to protect the stability of our financial system, and to uphold the credibility of our institution, which is entrusted with the nation's confidence. The strength of central bank, ultimately, it doesn't rest in its instruments, but in the trust it commands. Trust is the true currency of central banking. That trust is not symbolic. It is clearly reflected in the purchasing power of households, the confidence of businesses, the decision of investors, and the stability of our financial markets. It is earned through consistency, independence, and disciplined policy action. It is sustained through clear and very transparent communication. Leadership may transition, but the mandate does not. The bank's commitment to price stability in support of sustainable economic development remains firm and unchanged.
Welcome back to Money Moves. Let's now go over to Grace for today's market review. Hello there, Grace.
Hi, Melissa. Let's now track how the markets traded across the continent, starting off with the equities. In Nigeria, the NGX All-Share Index advanced by 1.39%, while the BRVM in Abidjan climbed 0.96% to 395.95. The Nairobi Securities Exchange dropped 1.47% to 211.19. In South Africa, the Johannesburg Stock Exchange slipped 0.63%, while in North Africa, Egypt's EGX30 fell 2.98%, while Morocco's MASI edged up 0.26%. Let's do a quick round of some of the Pan-African currencies. The rand weakened 0.93% to 16.21 against the US dollar. The Egyptian pound strengthened 1.37%, while the CFA franc gained 0.56%. The Kenyan shilling firmed 0.02%. The Moroccan dirham rose 0.17% to 9.16, while the naira strengthened 0.44% to 1,344 naira 44 kobo as at 1350 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude rose 1.65% to $71.51, while US WTI gained 1.87% to $66.41. Natural gas climbed 1.76% to $3.06, and Arabic gasoline advanced 1.12% as at 1337 GMT. Finally, to soft prices. Cocoa slid 5.58%, while coffee dropped 3.12% to $276.25. Cotton rose 0.41%, palm oil eased 0.19%, and sugar slipped 0.58% to $13.68 as at 1342 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it for today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching and bye for now.